Diane King Hall is here with me to take a look at some of the action and some of the focus that she's looking on, some of the movers on Wall Street too. Good morning, Diane.
Good morning. Yeah, you mentioned stocks starting out a little bit weaker this morning. Add Apple to that pack. Apple was indicated higher. You've got some bullish views around this one off the back of the iPhone launch. So Wedbush becoming more bullish on Apple. The analysts over there boosting the price target to 310 from 270, keeping an outperform rating on this stock. The trigger for the call, the iPhone 17 launch. Wedbush says demand is tracking 10 to 15% ahead of the iPhone 16 at this point, and supply checks in Asia suggest Apple is ramping up production by about 20% for the base and Pro models. Add to that, analysts say that the new iPhone Air could be the surprise hit of the upgrade cycle. Wedbush saying they believe the AI monetization piece could actually add $75 to $100 per share to the Apple story over the coming few years as it finally plays out. It acknowledges that WWDC was disappointing this past June, but they believe that there's no AI premium factored into Apple stock at current price, which makes it more attractive, more of a compelling large cap tech name to own at the year end and through 2026. And keep in mind, Apple has been an underperformer year to date when you compare it to the S&P 500. When you compare it to the rest of the Mag 7, it has been one of the laggards there. It's not at the bottom of the leaderboard, but it's nowhere near the top. So it certainly has needed some of a boost this year. Over the past month, it has caught a tailwind. So again, Wedbush is maintaining its outperform rating, raising its price target to 310 from 270. And guess what, Nicole? Apple is on its Wedbush best ideas list, and it's keeping it there.
There you go. And it was very interesting to hear Stephen Orr talk about his change from Google to Apple. He got the 17 Max and made that announcement that now he's is an Apple fan and that he's been buying Apple, and it's very interesting because are there still going to be people who maybe there's still new customers, right? M&A news. We have Pfizer in the news.
That's
too.
right. Listen, Pfizer is making a big move here, and this has to do with the weight loss drug space. They're buying Metsera. This is a newcomer to public markets. Metsera, you'll recall, is part of the 2025 IPO class, catching a big move today off the back of this announcement, up more than 60%. And what's interesting, Nicole, you know this well because you've covered M&A activity for years. Pfizer, as the acquirer, is catching a bid. It's up more than 2%. We know usually the case is the acquirer, you'll see shares dip because, they're dipping into their cash coffers for a deal. But look, it's a tailwind that Pfizer needs. It's not one that Metsera necessarily needs because that stock has already been a strong performer year to date. But here's the latest. Pfizer announcing it will acquire this weight loss drug maker, Metsera. The deal's worth up to $7.3 billion. Some of this is contingent on reaching some milestones. They'll pay some in cash, and then there's this contingent value depending on the clinical and regulatory successes that it needs to meet. Here's why this is important. Metsera already has a pipeline when it comes to oral and injectable weight loss treatments. They've got a GLP-1 drug that actually shows 8.4% weight loss in 36 days. That's a little over a month. That is huge when you think about the space for whether we're talking about Novo Nordisk's Wegovy or Eli Lilly's Mounjaro, and that's the injectable side of it. So, when you talk about those drugs, they have performed well, but 8.4% in just over a month, that's a big deal there. They're also working on 2 oral GLP-1 drugs. Those are expected to start trials soon. We know Pfizer has had struggles in this space, finding the right weight loss drug, whether it's an injectable or a pill. They haven't reached success with their trials. They just haven't been able to cross that hurdle. So it looks like their approach here is to buy.
Okay, and last but not least, we can't go a few minutes without talking about semiconductors. That's always the big story on Wall Street. We got some stories today.
Yes, Morgan Stanley is out with a look across the space this morning, whether we're talking about ASML, Applied Materials, KLA Corp, and seeing who's better and who's lower on their leaderboard ranking. They're upgrading ASML to overweight from equal weight. They've got a new price target. Their price target is based on euros. It's 950 euros here. The reasoning here, they think the market is underestimating contributions from both Intel and Samsung. They think memory chip demand is picking up, and they think that's going to be strong for ASML, and that AI growth could drive some momentum there and some more demand there for ASML. So they think ASML is undervalued as it relates to others. AMAT, they have upgraded that to overweight from equal weight. Their price target is 209 on that one. They see AMAT as the biggest beneficiary of a memory rebound. Upside, they think, is more skewed than peers. Lam Research, equal weight on that one. They are moving from underweight, though. Their price target is 125. They've only upgraded to equal weight because they see some stabilization here, but not a standout upside story. KLA Corp, they have downgraded that to equal weight from overweight. Part of that is just valuation. KLA has had quite the run. They think they're doing well fundamentally, but they think it's just expensive.
Okay. Diane King Hall covering the big news of the day. Thank you so much.